I love the idea of innovation. The money center banks have been sitting on their hands for years, crapping on the crypto industry, but it's not about Bitcoin. Nothing to do with Bitcoin. It's digital payment systems. That's the potential. That's the amazing opportunity we have here. The reason that will be important and why we'll get price appreciation on Bitcoin is the minute that happens, it will signal the move to the next act, the Market Infrastructure Act. And why that matters to everybody in this room is we will finally determine, is Bitcoin a commodity or a security? And when that is determined and regulated, Katie bar the doors, $1 trillion will come and index that asset. Let's all hope that happens while we're all alive here.
Bitcoin is once again dominating the financial spotlight, soaring past $123,000 to hit a new all-time high and holding strong above $119,000. This breakout follows a month of explosive momentum, with June closing at record levels and bullish signals continuing, fueled by growing institutional demand and a surge in ETF inflows. Analysts expect Bitcoin could challenge the $125,000, $128,000 range by late July, provided it maintains support above $114,000. Major players are ramping up their exposure, with high-profile purchases and a noticeable rise in whale accumulation. On-chain data and sentiment suggest we may soon enter a new phase of price discovery if Bitcoin pushes past $124,000. Meanwhile, the regulatory landscape is shifting. Paul Atkins is steering the SEC toward more crypto-friendly policies, while bipartisan support builds around market structure and stablecoin legislation. This growing regulatory clarity is unlocking optimism across the industry. As Bitcoin gains formal recognition as a commodity, institutional investors are positioning it as a safer, more viable asset. Kevin O'Leary notes that the last barriers holding back trillions in capital are being removed. Once these regulatory hurdles fall, the current trickle of institutional inflows could turn into a tidal wave.
Everyone comes to Bitcoin eventually. You get it at the price you deserve. Everything goes to zero against Bitcoin. Okay, Donald Trump's learning curve on Bitcoin just started. And, he's like a lot of people who come to Bitcoin and said, I just found Bitcoin. Here's how you improve it. No, you are second to Bitcoin. You will have to bend the knee to Bitcoin, just like everybody else. Bitcoin is on its own vector.
What does the United States or the president that is in the election have to do, to bend the knee?
He has to make Bitcoin legal tender. He has to start putting Bitcoin on the treasury of the U.S. government, and he has to start in the Bitcoin global hash war. Every country is not going to be adding Bitcoin to the reserve status to compete in the global hash war in the 21st century. That's World War Bitcoin. You have to have Bitcoin. It's a mad scramble to get more Bitcoin because the fiat money world is collapsing. So if you want to win World War Bitcoin, you need to start accumulating and hoarding and buying and stacking Bitcoin aggressively as soon as possible.
Cyber criminals are getting smarter, and everyday investors are the new target. You worked hard for your crypto. Don't lose it to a scam. Recently, attackers bribed offshore agents at major crypto platforms, stealing names, birth dates, even social security numbers. They drained real accounts in seconds. No blockchain hack, just human error. Once it's gone in crypto, it's gone. That's why ITrust Capital created the Premium Custody Account, the most secure way to protect your asset. It's a closed-loop system, meaning funds can only move between you and your account. Even if someone gained access, they can't steal your crypto. Backed by institutional-grade custody at no extra cost. Sleep easy knowing your investments are locked down. Click the link, use code DOSE7, and get a $100 funding bonus. Start protecting your future with ITrust Capital.
Don't think that there'll be a drop or a significant drop that comes along? Have we moved past that because of the regulatory changes that have taken place?
I think it'll remain volatile because it's a 24/7, 365 global asset. You can panic sell it on Saturday night. You can enthusiastically buy it on Sunday morning. That's a feature. Mm-hmm. That's not a bug.
Yeah, you've lived through some of the swings, but do you think we won't see the downturns like we've seen in the past just because of the changes we've seen?
I think it's going to surge through the roof, and then it's going to surge to 180 and crash to 140, and people will be freaking out about it again. But let me make this one analogy. Volatility is like fire, and some people run away from the fire.
He compares Bitcoin's volatility to the early days of transformative technologies, calling it a natural trait of an emerging, always-on global asset. Historical trends support this view. After past halvings, Bitcoin surged 280% in 2016 and 550% in 2020. Firms like VanEck even forecast a potential rise to $180,000 within the next 18 months as regulation improves and institutional interest grows. Frank Holmes describes the crypto market as operating at full speed, with Bitcoin acting as a real-time price discovery tool that responds instantly to global events and emerging trends. He emphasizes how the rapid growth of the metaverse and Web3 has created a parallel financial ecosystem, separate from traditional platforms like the NYSE and Nasdaq. This expanding digital economy has become so influential that policymakers are now actively working to integrate crypto into the traditional financial system, marking the beginning of a major financial shift.
I think it's going full throttle, and Bitcoin as a price discovery mechanism is saying yes, it's going to happen. It comes off because someone disagrees and then goes back up because something else is evolving. But we're in a super cycle like we are in AI. These are two important super cycles. And the metaverse of the crypto Web3 ecosystem has been growing so significantly outside of the New York Stock Exchange and NASDAQ as we know it. It's created its own ecosystem. And now these policies are going to integrate them. They're going to merge them. And I also believe that for President Trump, the idea of the stable coin is to really make the dollar strong because we have China pushing and Russia to de-dollarize, to harm the US dollar, to knock it down as the best currency to trade around the world. And so I think this thesis, this policy is really positive for the crypto ecosystem. What's happened in Washington, very few have been aware and dismissive because they listen to bank lobbying groups that have been trying to debank anyone in crypto. We know this from our personal experience in Canada. We know this in Sweden. The mechanisms take place in America was called choke point 2.0. And I think we're going through this sort of friction, lots of friction transition where the digital world will take off like a rocket to Mars. Well, I think short term it's going to $500,000. And the long term, it's very conceivable to be at $10 million. Because what happens is that one Bitcoin is worth 100 million Satoshis, and they're less than a penny. When they go and trade at a penny, that means Bitcoin's at $1 million. So when people go to Schwab and go and buy a HODL, a Bitcoin ETF, they're basically buying Satoshis. And for $1,000, they're getting almost 1 million Satoshis. $2,000, they easily have the best penny stock idea in the world because they're buying increments of a penny. And as adoption takes place, and there's a limited scarcity of supply, it will rise. I think by Christmas, I think that's the potential, is $500,000 by Christmas, because the adoption goes through these exponential moves, goes sideways, and then all of a sudden it gaps up and the adoption process changes. So I remain very positive towards the industry, but we have to also recognize it's volatile. It's extremely volatile. So you have to have the discipline, buy the dip, stack your coins. If you want to put $50,000 into them, don't buy them all in one day. You buy them in 5,000s at a time. Buy the ETF every time it has a down day. And I think the daily volatility is close to 5%. So anytime it's down 5%, you want to be a buyer.
Frank Holmes believes the Trump administration's push for stablecoins is largely aimed at reinforcing the US dollar's dominance, especially as nations like China and Russia seek alternatives in global trade. By integrating stablecoins into national policy, he argues, the U.S. can maintain the dollar's central role in global finance. Holmes also points out that many in Washington underestimate crypto's potential due to strong lobbying from major banks that feel threatened by digital assets, a trend he's also seen in Canada and Sweden. He likens the current U.S. regulatory climate to choke 2.0, a phase marked by resistance as the financial system transitions from traditional infrastructure to digital. But Holmes is confident this friction will give way to rapid adoption, comparing it to a rocket launch. He even predicts that Bitcoin could reach $500,000 by Christmas if adoption accelerates as it has in past cycles, noting that markets often remain flat before making sudden, dramatic moves. Despite his optimism, Holmes warns of crypto's extreme volatility. He advises investors to stay patient and disciplined, suggesting a dollar-cost averaging approach, buying in small amounts during market dips of around 5%. This strategy, he says, reduces risk and positions investors for stronger long-term returns in an unpredictable market.
All thought that $10,000 was a pipe dream and never going to happen, right? So I think Hal Finney was just like, a decade ahead of his curve in terms of thinking about, that this could actually happen, right? So I think, because if everybody was 100% convinced that it's going there, it would already be there, right? And so there's got to be doubt about the pace of adoption, how much more money is, what the addressable market actually is. We don't fully know. I mean, I think Hal Finney's estimate is reasonable because still today, even though he made it, is because there is a lot of monetary premium where people are trying to protect themselves from inflation and save by, buying real estate. In some cases, they're not even using it. It's just vacant. But, there's a lot of that in New York and China and different places, right? And that is not a great thing because it makes housing less affordable. And if there was a financial product or a monetary instrument that did that for you, it would make housing more affordable. So it would improve, cost of housing, access to housing, quality of housing that you can afford on a budget. So those will all be good things. And there are other things with monetary premium or where people are trying to protect against inflation, like, the bond market, some more esoteric things like art, wine, where people use that as a kind of novel way to protect against inflation. And if you add all that stuff up, it's, 200 trillion is possibly a conservative estimate at this point because we've had a lot of inflation.
Adam Back supports the bold prediction of Bitcoin eventually reaching $10 million, linking this outlook to the long-term impact of Bitcoin's halving event. These occur every 4 years, most recently in April 2024, and reduce the number of new Bitcoins entering circulation. Back believes that each halving creates a natural supply shock, especially as demand from investors, institutions, and ETFs continues to rise. As Bitcoin becomes increasingly scarce, he argues, these events have historically triggered powerful bull markets, with prices compounding in each cycle. He sees this diminishing supply, combined with growing demand, as a key driver of Bitcoin's long-term price growth. Back also points to supporting trends such as institutional adoption, Bitcoin's strong performance compared to traditional assets, and increasing financial uncertainty worldwide. He highlights rising ETF inflows, corporate accumulation, and the possibility of governments holding Bitcoin as reserves as factors that could accelerate Bitcoin's ascent. In his view, these data-driven dynamics make a multi-million-dollar price tag feasible within the next 2 cycles. Senator Cynthia Lummis echoes this optimistic outlook. She's pushing major legislation in Washington that would establish a U.S. strategic Bitcoin reserve, proposing the government accumulate 1 million BTC over 5 years, about 5% of the total supply. Her policy initiative underscores a growing political recognition of Bitcoin's potential as a long-term store of value and a strategic financial asset.
Have modeling that shows that Bitcoin is going to increase dramatically and then more slowly over time. All of the Bitcoin, meaning 99% of all the Bitcoin that will ever be mined, will be mined in the next 10 years. So this asset has growth potential for the next 10 years that's tremendous. I think the American people should admire the fact that President Trump was foresightful enough to engage in the digital economy. Everyone is going to be involved in this economy in one way or another, and I'm proud of the president for choosing to engage in this very promising component of the economy.
Senator Cynthia Lummis proposes that a U.S. strategic Bitcoin reserve could protect the dollar from inflation and reinforce America's global financial leadership, especially as nearly all Bitcoin is expected to be mined within the next decade. Her plan involves the Treasury securely holding 1 million BTC for at least 20 years, using it only if necessary to help reduce national debt. Former President Trump has also voiced support for federal Bitcoin accumulation and pro-crypto policies, signaling growing mainstream acceptance. Analysts suggest this kind of news could trigger a supply shock, with short-term price surges of 25, 50%, and potentially much larger gains if the plan unfolds over several years. Technically, Bitcoin has recently broken above a 7-year trend line on the logarithmic chart, a key resistance level that has historically preceded major bull runs. This breakout, now confirmed on monthly time frames, marks a strong shift in market momentum and places Bitcoin in uncharted territory. Analysts point to consistent all-time high closes across multiple charts as fuel for projections targeting $150,000 to $200,000 by the end of 2025. Models like the logarithmic growth curve and power law emphasize Bitcoin's long-term exponential growth, offering more predictability in the face of volatile short-term moves. These models help traders identify support and resistance across cycles. This recent technical breakout also aligns with strong fundamentals. Supply has decreased following the latest halving, while demand is rising from ETFs, institutions, and even governments exploring Bitcoin reserves, making the case for a sustained bullish trend even stronger.
Morning. Welcome back, Ray. You see Bitcoin rising to $150,000 a coin. And I read your stuff. So when does it get there?
It's going to happen in the next 6 months, and this is the golden age of digital assets, Stuart. What's going to happen is we've seen the rulings come in, and we're seeing everything from the crypto regulations, the ability to get to the Clarity Act, the Anti-CDBC, Surveillance State Act, and the Genius Act. They're all coming through, as we heard. The White House cut some deals overnight, and that's really driving the run to Bitcoin. And then the other piece is we're hoping interest rates do come down, and when they do come down, what it does is create a devaluation of the dollar, meaning people are going to go to growth assets and actually risk on activities. So I think that's really why we see 150,000 on the Bitcoin side.
That would be quite a move, wouldn't it? They're from 120 to 150. I'm trying to do the math. That's about, what, 25%, something like that?
Definitely. And it's going to happen because what you're going to see is you're going to see more countries actually have Bitcoin reserves. That's going to actually add for demand. And I think that's the other piece. And of course, having the regulations in the US means we're going to increase the Bitcoin conversion. So you'll see more companies like Circle emerge in terms of having the ability of stable coins.
Fox Business recently reported that Bitcoin could reach $150,000 within the next 6 months, with tech expert Ray Wang confidently predicting the surge. He calls this the golden age of digital assets, and several key factors support that outlook. First, the U.S. is on the verge of passing major crypto regulations, including stablecoin and market structure bills. Experts believe this clarity will attract trillions in institutional capital. At the same time, Bitcoin ETFs are seeing record inflows from Wall Street giants like BlackRock and Fidelity, driving steady demand just as supply tightens post-halving. Macroeconomic conditions are also favoring Bitcoin. With interest rates falling and growing concern over the weakening U.S. dollar, more investors are viewing Bitcoin as a hedge and long-term store of value. Global adoption is accelerating too, with countries and central banks increasingly considering Bitcoin as a reserve asset, reinforcing its scarcity narrative. From a technical standpoint, Bitcoin has broken above a 7-year logarithmic trend line and is closing monthly candles at new all-time highs, classic signals that often precede explosive bull runs. With all these factors in play, analysts agree, we may be entering a historic phase for crypto, with $150,000 on the horizon. What price do you think Bitcoin could hit in the next year? And what's driving you, or others, to favor crypto over traditional investments? Let us know in the comments. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.